And welcome, it's Mary Ellen McGonagle with your weekly Edge show for Friday, May 10th. Today we're going to take a look at those broader markets and see where we closed for the week. We are getting awfully close to hitting new highs. You'll want to be aware of that, as well as other factors relating to these various market indices. Also, some of the headline news that drove price action last week, and last up, viewer question of the week. And it's all about where sector rotation is taking place. And I'll also share with you why we are seeing strength in some of these newer areas of the market. So, talking about those headline news, we did see interest rates remain elevated. On Thursday, we did get some initial jobless claims that jumped to the highest level in 9 months. So that helped keep rates certainly not rising. Also, we did see earnings reports, big primary driver of those stocks that went up the most, as well as your biggest losers. We did see consumer confidence fall to its lowest level in 2022, and it's supporting that continued underperformance that we're seeing in the consumer discretionary space. Next week, key inflation data will be released. Core CPI and PPI data for April is going to come out. So let's go ahead and take a look. Where did the markets close for the week? And here we are with the daily price chart of the S&P 500. We were up 1.8% for the week. Keeps that RSI trending upward and in positive territory. Likewise with that MACD, we had that bullish MACD crossover earlier in the month. We're now up above that net neutral zero in positive territory, trending higher. And here is that prior high in the index. We're about 0.8% away from advancing above that recent high, which would be certainly good news for the broader markets. Let's go ahead and take a look beneath the surface at those 11 sectors in the S&P. This is a 2-month daily price chart view, and I've sorted it with this RSI, that relative strength indicator. And I mentioned that we are seeing a bit of sector rotation. Up here again in this forefront are your stronger areas, and down here are those weaker sectors, certainly relative to the broader markets. So up here at the forefront, one area that continues to advance recently are industrials. This is XLI. The group did outperform in a bid to regain a new high, and the move into these industrials is all about growth. A number of these larger companies are coming out with good earnings, and the reason behind that is that we are seeing global growth estimates being revised higher. So those larger international facing companies are faring the best. So we can see with XLI that RSI in positive territory, but also that MACD advancing in positive territory as well. And another area that is continuing to remain at this forefront is consumer staples and utilities. Now, both areas do offer nice high yields, but this time we are seeing other reasons that this group is at the forefront. And for staples, it is all about earnings. We're seeing companies such as Procter & Gamble and Coca-Cola come out with strong numbers despite high inflation, and we're seeing a nice advance in that group. Utilities, this particular move is all about electricity and certainly other areas as well. But with that move into electrical utility companies, it's all about the demand increase for electricity with these data centers that are doing AI-related tasks, and they're estimating that the need for electricity will continue to grow well into 2030. Also on the move, we can see healthcare, not a big mover last week, but certainly inching into positive territory with the move above that 50-day simple moving average, with that MACD entering positive territory. Now, on that weaker side, you do want to be aware. I talked about consumer discretionary, and the area really is struggling. Certainly, Tesla's pullback last week would be one reason, but overall, a number of these retail and consumer-facing companies are struggling. We can think Starbucks, Nike, and certainly several others, and the group overall is underperforming. From here, we're going to take a look beneath the surface of these sectors at ETF that I find to be really quite helpful as far as drilling down further beyond that broader sector view. So again, 2-month daily price chart with an RSI indicator, and take a look. KRE up here at the forefront. It did perform in line with the broader markets, but of note that we are continuing to inch higher into more bullish territory. I'd like to see more volume to be convinced that we have an advance similar to prior periods, but it certainly is noteworthy. Also up here at the forefront, home builders. Now they did outperform a 2% advance, which is notable given that interest rates are remaining elevated. You can see this nice close back above that 50-day simple moving average, RSI in positive territory, likewise with that MACD. So home builders are looking quite good, led by Toll Brothers, which is part of my MEM Edge report. Also, we can take a look at some of these weaker areas. You will want to be aware of the fact that software stocks are continuing to struggle, and this is an area where we're seeing firming up with this double bottom formation, but we did not see any follow through. So I am keeping a close eye on this area, certainly because when the group does get going, it can be quite explosive. I will tell you, as long as interest rates remain elevated, it's going to be hard for that group to move a whole lot higher. Semiconductors also inching higher, but still finding resistance around this key 50-day simple moving average. We did see a nice advance into positive territory with that MACD, the RSI trending sideways, but also in positive territory. I'm noting this because there are several heavyweight names in this sector that are faring well. They are AI related, and they are also a part of my MEM Edge report. We can certainly take a look at one name that is noteworthy because of its gap up today and because the reason of that gap up, and that is Taiwan Semi, TSM, and it was up 4.5% today on very big volume. The reason is the company reported their sales numbers for the month of April, and they saw huge demand in AI related chips. So hence that gap up into a base breakout. Very bullish looking chart. Last up, I did want to share with you a longer term view of that utility sector. We talked about the group on the move higher and why. This longer term monthly chart will provide an outlook that's going to be longer term as well. And we can see that it's been over the past 3 months, we've seen a nice advance. And if we look at this view, you can also see that the group overall is poised to break out of a almost 2-year base. And the longer that base breakout, the longer your potential advance out of that. Also, we can see that MACD black line up through the red just in the beginning stages of trending upward with a bullish RSI. So you can see that we are seeing rotation into utilities and other areas such as industrials due to global growth. That's it for this week. I'll look for you again here next Friday.